Hey, what's up, stock compounders? Brad here. So it is that time of year again. We get to look at 13F filings, which show us what our favorite investors in the world have bought, sold, and are just holding in the fourth quarter of 2020. We get to see their positions as of December 31st, 2020, a month and a half ago. Mohnish Pabrai calls this time of year an orgasmic experience, getting to dive into, the activity of the world's greatest investors. So the place that I like to go to find out what investors are doing, there's so much information in one spot. It's called Dataroma.com. And you can look at the super investors to see, let's open one, for example, where I know there's been some activity. So David Tepper, Appaloosa Management. So we get to see what his positions are as of the end of the fourth quarter 2020. The portfolio value, what his biggest positions are. It looks like in the fourth quarter he reduced a little bit of T-Mobile, added quite a bit of Amazon, almost 40%. So it's just a great site to get a quick snapshot of what investors did recently. So what I've done here is I've compiled the highest conviction activity, highest conviction bets from my favorite investors to follow. And like I said, this is, activity in the fourth quarter of 2020, which is the most recent activity we get to see. So the way I've structured this, I've got the guru here, and then the kind of fund, right? The name of the fund. Activity, what stock they bought, if it was a new buy, or if they added. If they added, it means they also owned it in the third quarter of 2020. And then this is a really important column here, okay? So the great thing about 13F filings, right? Seeing what other investors have done, it's basically bowling with bumpers for investing, okay? We get to see companies that have been vetted already by the world's greatest investors. They've put actual money on these companies. So that's fantastic for us. That gives the retail investor, the individual investor, a huge advantage to be able to see that information. What we don't know for sure is the exact price they paid for that stock, right? We know they bought it in the fourth quarter, so we can kind of determine the range of prices at which they bought. We don't know the exact price, but a little trick I like to use is I like to find the lowest price that was offered in the fourth quarter for each of these companies, okay? That means these super investors could not have bought below that price, okay? They could have bought at that price. Not likely, considering how much money they're putting into each one of these bets. They're going to move the market putting that much money in. But we're just going to assume, to be conservative, that they bought at the low price in the fourth quarter. So that's what I've got here, the low price in the fourth quarter, all right? I also have the current price. This is the price as of February 16th, 2021. And a beautiful thing happens when we compare the low in the fourth quarter to the price today. And what that tells us is, how high above the price that these super investors got in are we now, right? What's the potential, delta between where we can buy today and where these super investors bought. So I've sorted this by the delta, okay? You can see, with Verizon, we saw Berkshire Hathaway bought a new stake in Verizon in the fourth quarter. The low in the fourth quarter was 56. The price today is 56. So we have the opportunity to buy Verizon at or below the price that Berkshire Hathaway bought Verizon, which is fantastic. And then, like I said, it's sorted. If you look at DNow, which was bought by Michael Burry, compare the low in the fourth quarter to today, huge difference, right? It's more than doubled. It's like a double and a half since then. This column, we've got the market cap. Market capitalization, it's the number of shares outstanding times the share price. Okay, it's the market capitalization of the company. For beginning investors, it's probably not super important. For me, I like to ideally get in at smaller market caps. Okay. If you get in at a really large market cap like Amazon, 1.64 trillion, or Apple, 2.24 trillion, the company is already very big. And so you can argue that it's unlikely that one of these companies is going to be a 10-bagger from this point. It's very unlikely that the company is going to be a 100-bagger, right? 100x from here. And those are really the opportunities that I'm looking for. So something to consider. And then finally, VIC. This is Value Investors Club. Okay, this is a website that was started by Joel Greenblatt. It's basically a community of value investors where you can submit an investment thesis for a company. Now, these write-ups are vetted by some great investors, right? So you've got to have a really high-quality write-up for it to get in to the club. But, I don't have a membership. You don't need a membership to see the write-ups. There is, I believe, a 45-day lag time from when a write-up is submitted to when I can see it because I'm not an active member of the group. But that's okay. A 45-day lag time doesn't bother me too much. It's the same with these 13F filings, right? We have a 45-day lag time. We don't get to see what's happened at the end of quarter 4 until mid-February. So not a problem. Now what I've done here is if it had a Value Investors Club write-up, these particular companies in the activity column, I wrote when the most recent one was. And those are super valuable. If you're considering any of these companies and they have a Value Investors Club write-up, I would highly recommend you read that to kind of see that business through the eyes of a strong investor. Okay. So you can see here a number of them do have write-ups. Some of them have write-ups with an S in front. All right. What this S is short. All right. So the investor that wrote up this thesis for Apple is betting that the price is actually going to go down. Okay. So there's long thesis and there's short thesis. So for any of these that have a short thesis like Apple and ARRY, you're probably going to want to do a bit more digging to make sure that those are sound investments. It's usually a red flag when there's a Value Investors Club write-up that's a short thesis on a company. So just keep that in mind. And then finally, these investors down here, I also really like these investors. So any investor on this list is one that I really respect. These didn't have any significant activity, at least in the kind of higher conviction holdings in quarter 4. So that's what these guys are. They made the list, but they didn't have any stocks to look at in terms of buys or additions in the fourth quarter. So let's get into a few of these. The first one, Berkshire Hathaway, Verizon Wireless. Now, I'm a Verizon customer. I don't actually really like Verizon. I feel like, I'm kind of locked in to Verizon. I could go somewhere else. I could go with T-Mobile or Sprint or some other provider. But my sense is I probably get the best price at Verizon. I hope some startup comes in and disrupts the whole, wireless industry. I don't know how likely that is, but, basically all I'm trying to say here is I'm not a huge fan of the company, but I do shell out, a fair bit of money every month to Verizon Wireless, to have my smartphone. So the very compelling thing here, like I mentioned, Berkshire Hathaway bought, couldn't have gotten less than 56, and we can buy for 56 today. So, if I had to spend money on an investment today or tomorrow, I'd be digging in to Verizon Wireless. It's pretty interesting. And I believe it has like a 4.5% dividend yield. Okay, so that's a very solid dividend yield, especially in our current environment with, how low interest rates are. If you can find a solid business with a strong balance sheet and a 4.5% dividend yield, you're doing very well. And I don't know too much about Verizon. I haven't looked at the balance sheet, so do all that. I'm not giving any investment advice here, but it could be very interesting. The next one, David Tepper, had 2 on the list. So Facebook, he added to his Facebook position in the fourth quarter. The fourth quarter low was around $258 per share. Currently, it's $274 per share. So we're very close. Okay, we're very close to the price that David Tepper added to Facebook if he nailed that bottom in the fourth quarter. So, Facebook is compelling. I think it could still have a lot of growth from here. They own Oculus, VR, AR, I think is going to be, a very interesting space in the next 5 or 10 years. And of course, they have a lot more than just Oculus. It's really a spawner, right? Pabrai just did a talk at Peking University where he's really focused on spawners. And Facebook is definitely a spawner. So, it could be interesting to look at. There is a write-up from July of 2020. And I think Facebook is the most owned company by superinvestors that are tracked in Dataroma. In fact, we can look at that very easily. Go to the homepage, top 10 most owned stocks, Facebook. So there you go. Very popular with the big boys and girls, of course. So next we have Amazon. I was a little surprised to see Tepper added almost 40% to his Amazon position in the fourth quarter. You see the low was just over $3,000 per share. And, we're only 9% above that right now, which is nothing crazy. Amazon, I think it might be the second largest public company in the U.S. I think that's right. So it's a huge company, right? But it also has incredible spawner DNA. So, it's always making these small bets in very interesting industries, both adjacent to the original business and unrelated to the original business. So, it's compelling. The thing that concerns me significantly about Amazon is Bezos stepped down as CEO. And he did that in the first quarter of 2021, right? So he did that after David Tepper made this move of adding more to his Amazon position. Obviously, Bezos has been an incredible CEO, incredible capital allocator, just perhaps the best manager, the best CEO of the 21st century so far. Elon is probably giving him a run for his money. But no, I take that back. Bezos, I've been more impressed with than what Elon has done. So that's a concern, that Bezos is stepping down from that role. It's impossible to know how is that going to impact the kind of greater trajectory of Amazon for shareholders. That remains to be seen. But I do think it's a significant risk. There is a March 2020 write-up for Amazon. And in that write-up, there was a sum of the parts valuation done for Amazon. And I think it came out to around 1.5 billion. But again, that was almost a year ago. And, one thing we really learned from this pandemic was the strength of Amazon. Amazon got much stronger throughout, what we've been experiencing since March of last year. So, it's possible the valuation has changed, perhaps even significantly since then. So that's Amazon. Now, this one was very interesting. Howard Marks at Oaktree Capital, one of my favorite investors to look to for wisdom. He does a lot of interviews on, I think it's CNBC with Eric. I love his interviews with Eric. So they bought a new position in Cold, okay? And let's just pull up Cold real quick. I had never heard of it before. Americold Realty Trust. All right, what do they do? It's kind of interesting. The world's largest publicly traded REIT, focused on the ownership, operation, acquisition, and development of temperature-controlled warehouses, based in Atlanta, Georgia. So that's interesting. Temperature-controlled warehouses. I wonder what Oaktree is seeing, that there may be some tailwinds in that industry, the temperature-controlled warehouse industry. So that was a new buy. Bought, at a minimum at $33 per share. That was the low, and now it's 36. So still very close, 9% above that fourth quarter low. And, a pretty small market cap compared to a lot of these other companies in this list, $9 billion. Nothing on, Value Investors Club. I might take a peek at corner of Berkshire and Fairfax to see what folks are saying about Cold. But that's one that's intriguing to me. Next on the list, this was very surprising. So Li Lu, one of my favorite investors of all time, bought Apple. Okay, let's take a quick peek at this. Li Lu. So didn't do anything with Micron, nothing with Bank of America, reduced Facebook by a chunk. But you see here these new buys down here. Apple, 5.5% of the U.S. portfolio, which is actually a pretty small part of Li Lu's total portfolio. I think Li Lu manages somewhere around $13 or $14 billion. I think most of that is in China. But, a portion, almost $2 billion, is allocated to U.S. companies. So, only a little over 5% of that right now in Apple. But still, guys, I was very surprised to see him buy Apple. I mean, Berkshire and Li Lu have a lot of ties. I know Charlie Munger is good friends with Li Lu. Li Lu manages money for Charlie Munger. And, Buffett, Berkshire Hathaway, have been in Apple for 3 or 4 years now. It's just a little surprising to see Li Lu getting into Apple this late in the game, when it's just had a huge run over the last couple of years. So that was surprising to see. There's a short thesis, right, in Value Investors Club, and it makes sense to me that there would be a short thesis at today's prices. But, Li Lu's buying. So maybe there's something I'm not seeing. I give Li Lu a lot of credit, so I'm not going to automatically say, oh, Li Lu, he must have FOMO, right? He must see everything he's missed on Apple, and now he's getting in, kind of in the in this frenzied environment. I'm not going to make that assumption because I have so much respect for Li Lu, but I am confused by this purchase of Apple from Li Lu. That's all I have to say about that. Pabrai. So Pabrai, if we look at Dataroma, it really shows that there weren't any changes from Pabrai. But if you look at Dalal Street in the SEC filings, you see, I think it's a 13G, okay? And you have to file a 13G if, I believe if you own more than 10% of the outstanding shares of a company. And Pabrai actually added 6% to his Seritage position in the fourth quarter. Now, that must not have been for Pabrai funds. I think it was probably for Dakshana Foundation or something else. But what that tells me is that, at the price of $14.68, Pabrai is still willing to kind of put money down on Seritage growth properties. So, that's... I like seeing that because, I own Seritage. I bought in around $10 per share. So it's encouraging to see Pabrai kind of putting in a little bit more at $14 or $15 per share. So I just thought that was an interesting nugget there. And this was not the Q4 low, but this is the price I think that Pabrai kind of added to his position, around $14 or $15. Next, Michael Burry, Lumen. Okay, Lumen. I briefly took a look at Lumen. I think it has quite a bit of debt from what I remember, and so I just kind of pushed it off to the side. He did add this in the fourth quarter, so it was already a position in his portfolio coming into the fourth quarter. You can see it's gone up. If he bought at the low, again, if he bought at the low in the fourth quarter, which is what we're assuming to be conservative, it's gone up about 37% since December 31st, or since the fourth quarter, I should say. So I don't know much about Lumen. A few of you have reached out and, kind of poked me to look into Lumen. I believe I recall that it had significant debt compared to operating income, and so it was a pass for me. Seth Clarkman of Baupost Group. So Seth Clarkman, one of the legendary value investors of our time, wrote the book Margin of Safety, which is a fantastic read. He bought Intel. I'm pretty sure Klarman has owned Intel before, but he didn't own it in quarter three, and it showed up in quarter four. So it was a fresh buy in quarter four. The low was $44 in the fourth quarter. Right now it's $62, so it's had a bit of a run until today. And it's a very big company. It's a very big company. And I've seen Intel a lot from other value investors. The numbers look really good in terms of earnings yield. It seems like a value buy. But, I've also heard stories about how, Intel is really falling behind the competition on developing kind of the chips with the latest technology. So that's concerning. Again, I haven't looked too deeply into this. There's a write-up from August of 2020. So check that out. I think Sven Carlin, Investing with Sven, is a YouTuber. I think he's done some videos on Intel as well. So check him out if you're interested in that. Again, from Klarman, Qorvo. Okay, I don't know anything about Qorvo. He added in the fourth quarter. It's gone up 42% since that fourth quarter low. So there's that. Again, Howard Marks. So we saw Howard Marks up here with that cold storage REIT. And Howard Marks showed up again. Now, this is not in the 13F filings, okay? You will not find this on Dataroma. But if we go in here to TIKR Terminal, for the gurus, right, track the gurus, we can find Oaktree, and it shows up here, okay? It shows up as the biggest equity position for Oaktree Capital Management, by far, 38% of the portfolio. Whereas, you know, the one, well, let's look at Oaktree over here as well. Howard Marks. This is why it's great to have TIKR Terminal, because you know you can see more than what you're going to find in the 13F filings. So cold here, about a $440 million position, whereas you compare that to, oh, they're not going to give us the dollar amount. Oh, they are, 3.1 billion. Okay, so much bigger. Array Technologies. Oaktree owns 57% of Array Technologies. This is a company that was just taken public, all right? And what this company does, we can very easily click through and see what it does. Solar tracking solutions, okay? So they have these, they manufacture solar tracking arrays for these big solar farms, all right? And you can imagine why that would be getting some traction at this day and age. Traction. See what I did there? I didn't even do that intentionally. But, you know, you come back over here to our sheet, there's a short thesis from December of 2020, right? Just 2 months ago, on this company, Array Technologies. So, you know, I'm curious. I'm interested in this company as someone who's interested in sustainability, in renewables. So I'm probably going to take a closer look at Array, you know, but based on the 50% bump from the IPO, which is probably the price that Oaktree got in at. I mean, we can read the prospectus and the SEC filings to dig deeper into that. But, you know, there's more to parse out there in terms of whether or not this might be a good buy. Now, in this short write-up through Value Investors Club, this investor who wrote that write-up is shorting Array, but also long this company called Flex, which sounds like it's an international electronics company that has better technology than Array. Okay, so I'm going to look at that one as well. Moving right along, Guy Spier, okay, our buddy Guy Spier at Aquamarine Capital, added to Micron, all right, added 67% to his Micron position in the fourth quarter. Now, Micron was as low as 47 in the fourth quarter, which surprised me. It's just taken off like a rocket ship in the last couple of months. Which is fantastic. It's my biggest position right now. I bought in at like $34 back, you know, when I saw that Pabrai and Li Lu were buying in. So it's done great. It's, you know, according to some write-ups I've seen, it may be fairly valued at today's prices. But it could also very well be a long-term compounder. So even if it's fairly valued, that doesn't necessarily mean, you know, we should be selling out. That's kind of a framework shift I've had along with Mohnish Pabrai as he's been sharing, you know, how he's adjusting his investment methodology. So, you know, I wouldn't be super compelled to buy in at today's prices, but I'm also not selling. I'm going to kind of ride this one out. And of course, there's a write-up from March of 2020. Now, the last one on the list, Michael Burry, okay, his second one here, DNOW. I think it's an oil-related company. I haven't really dug into it. Quite volatile, okay? The low in the fourth quarter was around $4. It's approaching $11 per share now. So big jump there. Burry, he has a knack for finding these incredibly volatile companies, incredibly volatile stocks. And I wanted to talk briefly about Michael Burry. So Michael Burry, right? Most of us know him from The Big Short, back in 2008 with the housing crisis. We all saw the movie. Michael Burry made out like a bandit shorting the housing market. It was not rosy. The whole process of that was not rosy. It was not easy, as we saw in the movie. But it's just incredible to me. We all know what's been happening with GameStop. It's been international news, right? So Michael Burry has owned GameStop. A lot of you probably know this as well. I think he's owned it for a couple of years. I think, a lot of his buying was in like the $5 per share range. Okay. So I was very curious with this 13F filing release if he still owned at the end of the fourth quarter. And it turned out, let's find Michael Burry just so I can show you guys firsthand here. Michael Burry. What do we not see in here? We do not see any GameStop. Okay? So GameStop, as of December 31st, it had gotten to around $20 per share. Okay, if you go back a little bit before this, it hit $20 per share, $21 per share. So, the highest he could have gotten out at was somewhere around $20 per share. So that's great. He bought a lot at $5. Hopefully he got out or maybe around 20. But I've been so curious about this. I've been so curious how much of that short squeeze, how much of that crazy thing that happened with GameStop he was able to capture. And it appears he was completely out before this insane, Wall Street bets versus hedge fund battle was happening. So I wonder how he feels about that. He's probably okay with it. He had his process. It hit a price that he thought, okay, this is fully valued. I'm out of here. But I'd be very curious to hear him talk about, how he felt about, what happened with GameStop. But can you guys believe it? I mean, two of the most insane short situations in the 21st century, and Michael Burry had his paws in both of them. It's pretty incredible. It's really gotten me to pay more attention to what Michael Burry is doing in the markets. So that's a wrap on kind of the high conviction bets for the super investors that I like to track in Dataroma. One other thing I want to mention here is Seth Clarkman. Okay, so Baupost has been getting involved with SPACs. All right, we a lot of us first found that out when we saw that Baupost bought Pershing Square Tontine Holdings. I think that was just the last 13F release that we saw that. And they've been ramping up their activity in SPAC land. Where is Seth Clarkman? Here he is. So Seth Clarkman with Baupost. I mean, look at all these SPACs that they're involved with. Ajax, okay. Is this a SPAC? Yeah, this is a SPAC. RTP, RBAC, VSPR, AVAN, HZON, BSN, IIAC. Okay. I mean, again, still Pershing Square. These are the warrants for Pershing Square. So just so much SPAC activity. And there is a strategy I've been using over the last couple of months with SPACs that I think has a pretty impressive kind of asymmetric reward to risk. And I just want to talk a little bit about how that works. So these are the SPACs that Baupost Group owns as of the end of the fourth quarter, okay? And these are the prices today on these SPACs. Now, the strategy I've been using for SPACs is, and this isn't my idea, of course, I'm a shameless cloner. I got this idea from corner of Berkshire and Fairfax. The strategy goes like this. So if you can find a SPAC with a credible sponsor, right? And I'm sure Baupost has vetted these sponsors. If you can find a SPAC that has a small premium to NAV, where you can get in, say, $10.44, $10.52, right? You got a 4 or 5% premium to the net asset value of the SPAC. There's a pretty compelling case to make for situations like that. Because if you study these SPACs, what happens to the price upon deal announcement, upon merger announcement, not even the actual merger going through, just the merger being announced. I mean, some of these pops are pretty incredible. So the technique that's recommended or kind of laid out in corner of Berkshire and Fairfax is, find these SPACs where you can buy them close to NAV, and then when the deal is announced, when there's a merger announcement, take it off the table, okay? You're really just playing the pop. It's a kind of an upside without downside opportunity that the current market environment is offering. And you've heard about SPACs and how they're in a bubble. It's dangerous. There's a lot of risk. There's a lot of risk when you get into a SPAC after the deal is announced and you're chasing the price. Okay, that's when the risk is happening. And that's what a lot of these speculators on Robinhood are doing. They're not doing it this way. They're not buying in close to NAV and waiting, right? Waiting months, potentially, even years for the merger announcement. They're getting in after the merger announcement, chasing the price. So, for value investors who can approach this a little bit differently, I think there's real opportunity here. So, if you guys are interested in that approach, look at the threads in corner of Berkshire and Fairfax. Maybe take a look at some of these. Keep an eye on these SPACs. If they get down to $10.50, could be a very compelling opportunity. And obviously, one of them here is already below $10.50. So, just wanted to share that, guys. This has been a lot of information. Let me know in the comments which of these companies you'd like me to dive deeper into. Okay, I'm probably going to put up a YouTube poll to see which one you guys want me to go deeper into. It's probably just going to be these top 4 that are closest to the fourth quarter low. Yeah, and maybe I'll pick another one. Maybe Array. I don't know. We'll see. But let me know in the comments which one you want me to go deeper into. And, let me know which super investors you guys like to follow. What 13Fs are you digging into for new ideas? I'm always looking for new investors to follow as a shameless cloner. So let me know your favorites in the comments. With that, guys, I will see you all in the next video. Take care.